Give us a sense of the tone on the ground and the sorts of conversations that you're already having with people that are attending the event.
Well, thank you for having us. Yeah, we're very excited. This is our 20th Japan Forum, and we have more than 50% investors attending versus last year. So it's great to see an increase excitement about Japan. And there's a real debate going on here. Not everyone is convinced that Japan can continue to rally from here, but we're having a lot of very detailed and constructive conversations about the improvement in corporate governance in particular. And I think that is an absolutely key focus for many of the investors and many of the companies as they make the case. We are more interested in investors. We're more interested in our share price than ever before. And we're seeing a very strong debate kicking off this morning.
Corporate governance in particular, tell us more about that, because of course it's been one of the reasons we've seen the big run up in Japanese equities. What more do you think needs to be done if you could just take away maybe one or two different sort of objectives?
So the role of independent directors is definitely a key theme. How independent are Japanese companies? Are they really willing to let the board of directors tell the management what the strategy should be? Are they willing to appoint the right people to their boards? This is one key area. Another one which is starting to become a big debate is executive compensation. Japanese management and staff are underpaid, and investors are very happy to reward them with higher pay packages. But what is the kind of structure of that compensation, and how is that going to happen? Those are quite prickly issues. There's a lot to be discussed, but the debate is raging on those two fronts.
Yeah, Oliver, it's interesting because there's always a sense that, when it comes to momentum flows, investors can be quite fickle, right? We're starting to see some flows redirected perhaps back into China from whence they came, and also from, other darling markets like India as well. It's not just Japan. So I suppose the question is how you sustain this next leg of growth for this equity market. You've touched on some of the points already, but what do we need to see on a macro level from the Bank of Japan?
Well, the Bank of Japan is obviously looking for inflation and wages, and, wage increases going to be good, we think, for some of the consumer companies who are willing to use pricing power. But for the overall market, I think what's really key is the companies continue to deliver higher ROEs and higher profits. Now, for some of them, a weak yen is good for that. For some of them, a stronger yen is going to be a problem. So they really need to look at the underlying profitability and the key business units. So on that front, we also see a nice combination of, activist investors pressuring companies, private equity allocating more money, which is helping speed up some of these changes which need to happen. And once investors get a sense, this is a different paradigm, which I think has started last year and continues this year, they will put more money into the market. We're seeing a pickup in investors from all regions around the world. But the debate is still raging. They have not decided that Japan is really the place to go overweight 100%. So that, for us, that's the opportunity.
The debate when it comes to, the benefits versus the detriments of the moves we've seen in the yen continues, right? We had some commentary from the finance minister just in the last sort of few minutes or so. You've talked a little bit about how Japan Inc. has either benefited or not from that. Do you see a strong correlation in terms of demand for Japanese equities, the performance in that market and levels in the yen? And also, I suppose, how that feeds through to domestic purchasing power, right?
So many global investors want to see the yen strengthen, right? If you think in dollars, if you buy the Japan market, you want the yen to get stronger. So, there have been some sectors like real estate where people are thinking that might happen and they'll show some interest. On the other hand, for exporters, obviously, you want to have a weaker yen, and we've seen technology done very, very well on the back of AI and currency. So, it's really still a battle across the different sectors. I don't think it's as simple as saying, the yen leads to one decision on Japan equities. What I would say is one sector we still feel has been left behind behind is consumer and internet, where people are looking at domestic demand and they're not convinced it's going to be very strong, and they've kept away from a number of these stocks unless they have exposure to tourism. So we actually think that there are some very nice opportunities with the consumer sector where they're going to have pricing power and they're going to display that, and that's where we can see a lot of upside in share prices in that sector in particular.